Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from November 3rd to November 7th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from November 3rd to November 7th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Please take note that U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation, so please monitor the calendar closely for any updates. Let's dive into this week's events. Monday starts with US ISM Manufacturing PMI data. Tuesday brings the Reserve Bank of Australia interest rate decision and New Zealand unemployment rate figures. Wednesday features German factory orders, Eurozone PPI data, US ADP employment change, and US ISM Services PMI. Thursday includes Australian balance of trade, German industrial production, Swiss unemployment rate, Eurozone retail sales, the Bank of England interest rate decision, Canadian IV PMI, and Japanese household spending data. Friday concludes with German balance of trade, Canadian employment figures including employment change and unemployment rate, and U.S. Michigan consumer sentiment. This week's key market-moving events will be the Reserve Bank of Australia decision on Tuesday, the Bank of England interest rate decision on Thursday, and Canadian employment data on Friday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the Australian dollar against the US dollar and the British pound against the US dollar, as both instruments face significant central bank decisions and economic data releases. Let's start with the Australian dollar against the US dollar. Looking at the daily chart, the Australian dollar is currently trading around 0.6546, showing mixed signals in recent price action. The price has been moving lower and is now moving slightly above but still around the 20-day moving average. The stochastic oscillator is moving lower from the overbought area and is currently at around the 50% area, suggesting the pair is in a neutral zone. Looking at important levels, the Australian dollar against the US dollar has support at 0.6470 and 0.6414, while resistance can be found at 0.6611 and 0.6665. With the Reserve Bank of Australia interest rate decision ahead on Tuesday, this will be the most significant event for this pair this week. The RBA is expected to hold rates steady at 3.6%, but any changes in forward guidance could trigger significant movement. Thursday's Australian balance of trade data could provide additional volatility for the Australian dollar, especially if export figures show unexpected strength or weakness. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3143, showing clear bearish pressure. The price is moving lower below the 20-day moving average, confirming the downward trend. The stochastic oscillator is consolidating flat around the oversold area, suggesting the pair may be approaching a potential reversal point or at least a temporary bounce. Looking at key levels, the British pound against the US dollar has support at 1.3002 and 1.2835, while resistance stands at 1.3275 and 1.3432. Thursday's Bank of England interest rate decision will be crucial for this pair. The BoE is expected to hold rates at 4%, but any dovish commentary could push the pair toward the 1.3002 support level. The stochastic reading in the oversold area suggests that while the trend is bearish, traders should watch for potential short-term bounces, especially around key support levels. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Tuesday's RBA decision and Thursday's BoE decision, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.